All right, welcome to your market summary for November 11, 2025. Let's get right into the filings and the stories that were really moving the needle today.
Looking at the market today, you might think not much happened, right? Third quarter earnings season is pretty much in the rearview mirror, so a lot of the names we follow, SoFi, Block, the whole prop tech space, were basically silent.
But you and I know that's almost never the whole story. Even on the quietest days, there are these powerful currents moving things around. The real story isn't just about what didn't happen. It's about finding those hidden catalysts, those aftershocks from last week, and the tension that's building up just below the surface.
And the single biggest catalyst of the day, believe it or not, came from the world of regulation. And it put a huge spotlight on one particular digital health company. Okay, so let's break this down. Reuters dropped a report saying the FDA is planning to get rid of its most serious warning, the black box warning, on menopause hormone therapies. Now, why is this a big deal? Well, Hims&Hers, ticker HIMS, just launched a new product line for this exact market. Taking away that warning, that could be an absolute game changer. It could open the floodgates to millions of new customers and just blow the roof off their potential market size. This is a massive potential tailwind for them.
Now, the other bit of news for Hims today was an SEC filing that honestly trips up a lot of people. A Form 144. So, what is it, and should you even care?
And this is the key thing to remember about a Form 144. It is not a sale. It's just a heads up from an insider, like an executive, saying, hey, I might sell some shares sometime in the next 3 months. It's a statement of intent. A lot of times, it's for stuff like tax planning or just diversifying their portfolio. It doesn't mean a sale has happened, or that it even will. So context here is absolutely everything.
Okay, let's shift gears to our next big theme today, what I like to call the earnings aftershock. See, even though today was pretty quiet news-wise, the echoes from last week's earnings reports are still making some serious waves.
And first up, we've got Lemonade. Today, Morgan Stanley bumped up its price target on the stock, and it's all because of that monster earnings report they had last week. Lemonade literally called it their strongest quarter in company history. And yeah, the numbers definitely back that up. I mean, look at their gross loss ratio. That's a critical number for any insurance company. It improved all the way down to 62%. That's a huge step in the right direction, and it looks like Wall Street is finally starting to pay attention.
Now, on the complete other end of that spectrum, we have this number, a drop of nearly 8% in a single day. Ouch.
And that drop? That belongs to Celsius Holdings. Just like Lemonade's gain, this pain is a direct aftershock from last week's earnings. They reported a surprise loss, completely missed what Wall Street was expecting, and the stock has been paying the price ever since. It's a perfect reminder that bad news can have a really long tail.
But the most fascinating aftershock, the one that's a real head-scratcher, is the puzzle of Duolingo. Just look at this. The company hits this incredible milestone, over 50 million people using the app every single day. That's amazing, right? A huge win. But the stock got crushed. How on earth does that make any sense?
Well, the answer is hiding right here, in this one quote that tells the whole story. See, buried in their report, Duolingo basically told Wall Street, hey, we're focusing on getting more users right now, not on making more money from the ones we already have. And that spooked investors. They're so focused on immediate profits that any hint of a delay can cause a panic. It just goes to show you, sometimes even fantastic news gets punished if it doesn't fit the market's current story.
So while half the market is looking backward, reacting to last week's news, the other half is holding its breath for what's coming next. And right now, all of that anxiety, all that anticipation is focused on one single company that's about to report.
We're talking about On Holding, ticker ONON. And just look at this. Wall Street is completely split. You couldn't ask for a better showdown. In one corner, you've got Jefferies saying underperform with a $40 price target because they're worried about competition. And in the other corner, you have Morgan Stanley coming in bullish with an overweight rating and a $65 target. It's a total toss-up right before they report.
And really, to get why everyone's so divided, you have to look at its biggest rival, Deckers, the company that owns Hoka. Deckers trades at a price-to-earnings ratio of around 12. It's a classic value stock. On Holding, it trades at a sky-high PE of 76. It is priced for absolute perfection. So the entire debate comes down to one question. Can On's growth possibly justify that massive valuation? We're going to find out very soon.
Which, believe it or not, brings us right back to where we started, with all those companies that were totally quiet today. Because as we're about to see, that silence isn't an absence of a story. The silence is the story.
You look at fintech, proptech, digital health, streaming. It was just crickets. No major filings, no news. So what does that tell us? It tells us the entire market is kind of taking a collective breath. It's digesting that huge flood of information from earnings season, it's recalibrating, and it's basically just waiting for the next big signal before it makes a move.
Okay, so let's wrap this up. What are the big 3 takeaways from today? First, always watch for that single catalyst. One piece of news, like the Hims story, can totally define the day. Second, you have to respect the earnings echo. The market's reaction isn't a one-and-done thing. It can ripple out for days. And finally, you got to learn to understand the story in the silence. A lack of news is its own kind of news, telling you exactly where the market's head is at.
And that really leaves us with one final thought to chew on. On a day like today, when everyone is busy looking backward at last week's news or anxiously looking forward to tomorrow's, could the biggest opportunity actually be hiding in plain sight with the stocks that nobody was talking about at all? Something to think about. That's all for today. Thanks for tuning in.